Are you thinking about applying for Care Credit but unsure of the requirements? Well, then you're in the right place. Care Credit is a great tool for those who need financial assistance for medical expenses. However, getting approved for it can be tricky if you don't have all the necessary data. But don't worry though, I've got you covered. In this video, I'm going to discuss the credit score requirements for Care Credit, as well as other things you need to get approved. Now, you'll also get some helpful tips on how to improve your credit score. So if you're looking for a way to pay your medical expenses and improve your credit score at the same time, well then stick around. Welcome back to the channel. I'm Andy from Credit Sage, and we're just what you need to smash those credit goals. We've got over 3,000 reviews alongside a 4.9 out of 5 Trustpilot rating, so you can trust us to point you in the right direction. And today, we're going to talk about Care Credit. And I'm excited to help you take control of your health and finances. I've got a lot of valuable information you're going to want to hear, so let's get straight to it. So to begin with, what is Care Credit and how does it work? Well, Care Credit is a credit card that is designed to help individuals pay for out-of-pocket medical expenses, including those that are not covered by the insurance. It works by offering a line of credit that can be used to pay for various medical expenses such as dental care, vision care, cosmetic procedures, and veterinary care, among others. The credit card is accepted by over 225,000 healthcare providers across the United States, making it convenient and accessible option for those needing medical financing. Now you may be wondering, what makes this different from a regular credit card? Well, Care Credit works more like a store credit card. You know, unlike a regular credit card, the credit line for Care Credit is only available within the network of healthcare service providers that accept it. Essentially, you can only use it at participating provider locations. Another major thing that sets it apart from other credit cards is Care Credit offers flexible repayment options. While a regular credit card typically allows you to pay a minimum payment due each month, Care Credit offers fixed monthly payments over a set period ranging from 6 months to 60 months, depending on the terms of your financing agreement. And this can help you manage your budget and avoid high interest payments. Another great benefit of using Care Credit for medical expenses is that it may offer promotional financing rates for a specific period, such as interest-free financing for 6 months or 12 months, depending on the healthcare provider and financing terms. And this can help you save money on interest charges and manage your expenses more effectively. So to open a Care Credit account, borrowers can visit a participating provider where they will be required to provide their details. In most cases, they can figure out if they are approved within just a few minutes. You can also apply for Care Credit online if you'd prefer. And this approach may be ideal if you know that you will have an eligible purchase at a participating provider in the near future. And this allows you to ensure that you are approved first. So let's talk about what you need to get approved for a Credit Care card. Like I mentioned, this application process for Care Credit is pretty simple. You can apply at participating providers or online using the Credit Care website. Once you submit your application, the credit card issuer will review your credit report and credit score to determine if you are eligible for Care Credit. Now, while there is no specific minimum credit score you need to qualify, it's best to have a score of 620 to 640, although in some cases you can get approved with a score as low as 600. Now keep in mind that when you apply for Care Credit, the issuer will perform a hard inquiry on your credit report. This can temporarily lower your credit score, so it's important to be mindful of how many credit applications you submit in a short period. Moving on from your credit score, to be eligible for Care Credit financing, applicants must meet a few basic requirements. First, you must be at least 18 years old to apply and 21 years old to apply by phone. Additionally, a valid Social Security number is required to apply. Another crucial factor is having a stable source of income, which can include a job, pension, or other regular income. And this ensures that you have the means to make the payments on time and reduce the risk of defaulting on the balance. Therefore, it's important to have a steady source of income before applying for Care Credit financing. Now, as I mentioned earlier, there is no specific minimum credit score required to be approved for a CARE credit card. However, having a good score will increase your chances of approval and may even qualify you for a lower interest rate, among other benefits. So, to make this easier to understand, let's clarify what a credit score is and why it matters. Now, your credit score is a 3-digit number that represents your credit worthiness or your ability to pay back loans and debts on time. It's a way for lenders to evaluate the risk of lending you money. Your credit score is based on a variety of factors like your payment history, the amount of debt you have, and how long you've had credit. A high credit score means that you have a good track record of repaying debts on time, while a low credit score suggests you may be a riskier borrower. Now, why does all this matter? Well, your credit score affects your ability to get approved for loans, credit cards, and even apartments. The higher your credit score, the more likely you are to get favorable terms on your credit applications, like lower interest rates. So even if you do already have the minimum score, it's really best to work on improving your score. If you're not sure how to go about improving your score, that's fine. Whether you already have a good score and would like to boost or want to hit that minimum range, I can help you. There are many options for you. However, the first thing you want to do is check your credit report. Your credit report is a record of your credit history and is used to calculate your credit score. It's important to check your credit report regularly to make sure it's accurate and up to date. Use it to spot anything that might be dragging down your score or issues you need to resolve. If you find any errors or mistakes, you can dispute them with the credit reporting agency to have them corrected. However, for the best results in fixing errors, just hand it over to the experts. Now, you may not have the time or the technical know-how to deal with improving your credit, so why bother? Take the stress out by reaching out to CreditSage. Save yourself the hassle of going through piles of unfamiliar documents and instead resolve your credit issues with one simple phone call. Our credit sages know everything there is to know about resolving credit-related issues and dealing with the officials. Contact us by using the number in the description below. Now, we're going to look at a few practical steps you can use to improve your credit score or reach the minimum. First and foremost, payment history is one of the most important factors in determining your credit score. So late payments can have a negative impact on your credit score. It's really important to make sure all your payments are on time. Consider setting up automatic payments or reminders to ensure you never miss a payment. Your credit utilization is the amount of credit you use compared to your credit limit. If you have a credit limit of, say, $10,000 and you have a balance of $3,000, your credit utilization is 30%. And credit utilization is an important factor in determining your credit score. So it's important to keep it as low as possible and really try to keep your credit utilization below 30% to improve your credit score. If you have a long credit history, it can help improve your credit score. Closing old accounts can actually hurt your credit score in the long run, especially if you have a long credit history. So keep your old accounts open and use them occasionally just to keep them active. Also, keep in mind, applying for too much credit at once can have a negative impact on your credit score. So only apply for credit when you need it. If you're really struggling with poor credit or even just limited credit history, a credit builder loan or secured credit card can help you establish a positive credit history. And I want to encourage you to just be patient with all of these steps. It's important to take a long-term approach to improve your credit score. You'll gradually and ultimately build a strong credit history that will serve you well in the long run. Now, all of this may still sound a bit overwhelming, and that's okay. That's where we come in. CreditSage is here because we understand how to manage your credit, and we understand it can be a very daunting task. But with just a quick phone call to our team of experts, we can take the weight of credit management off of your shoulders. We'll work with you to create a personalized plan to improve your credit and reach your financial goals. So why not let CreditSage be your guide to better credit starting today. If you found this video helpful, please show your support by hitting the like and subscribe button for new videos each and every week. And with that, thanks for watching.